The S&P chops while the NASDAQ goes down as we wait on the Fed. What does tomorrow hold? This is Invest with Jacob. Okay, guys, so a snooze fest on the S&P 500 as it went mostly sideways for the day, but then after hours went down a little bit. However, on the NASDAQ, we did see a push down, and in yesterday's video, I said if you were bullish, the NASDAQ was a problem as it was lagging the S&P and showing signs of a potential local top. The NASDAQ pushed down hard after hours, and now the question is, where do we go on Fed Day? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with Fed Day today, let's jump into the chart and take a look. Okay, guys, so here we are on the 1 hour futures chart for the S&P 500. Before I jump into the charting, I do want to give a warning that I am seeing bearish divergences on our indicators that we use, and they are big time frame bearish divergences, which is usually a pretty good indication that they're trying to form at least a local top. If you don't know what that means, a local top means a top here, we pull back, and then we come back and make a new high. But the pullback isn't going to be like this pullback here. It's going to be a decent pullback of at least a few hundred points. So we're seeing these bearish divergences. So what does that mean? It means that the market comes up and makes this high. So does the indicator. So the indicator we're using comes up and makes this high. And we teach all this in my Elliott Wave for Beginners course. So you can do this on your own and see these things before they happen. So market comes up. The indicator's coming up as well. The market pulls back. The indicator pulls back as well. The market comes up and makes a new high up here, but the indicator's still back here, okay? So the market made a new high, but the indicator did not, which causes bearish divergence, and this is on a bigger time frame. And what happens is that's a sign that the move up is weakening because as the market is moving up, the momentum and the cash flow is not, and it rolls over, and then we see a drop after that. Now, these are big time frames, so that doesn't mean it has to happen today or tomorrow or even this week. We can still see our pattern play out completely like this, okay, up to the 5,000 area and then come down and still have bearish divergence. So it doesn't have to be right away. What it is a warning, which is why I said warning. It's a warning now that being long is higher risk at this time. Doesn't mean you want to be short because, like I said, they can complete that pattern up to 5,000. But it does mean that being long at this point is starting to become a high-risk area. So just a warning there for anyone who wants to take it or heed it. That's up to you. From a charting perspective, pretty boring today. They did sell down right into support at the close. 49.3375 is our support level that they must hold. If they cannot hold that level, then it becomes less likely they're going to complete an impulsive move to the upside. But they could finish this as an ending diagonal where you have a wave 4 down, and then you have 1, 2, 3, 4, 5 up to complete the move. Then we'd look for a wave 4 back down into this 4,900 area, and then wave 5 up from there. So that would be the bullish count if they cannot hold 49.3375, which they are sitting on at the close today. At the after hours close anyway, they'll resume here in about a half hour with the after hours trading, but they closed it right on the support level. So if they break down below that, the upside would have to take shape as a diagonal. If they're not going to go back up, then it would look more like an A, B, and then a C wave down, either in a wave 4 to this area, or they break support and start to test 48.50. The theme for the Fed tomorrow is going to be support. As long as they can hold support, the market looks at 5,000. And for support, overall is 48.50. As long as we're above the 48.50 level, 5,000 is still on the table in a direct manner. But if they break below 48.50, then we are looking much more like probably a B wave pullback. So I would call the entire move up A, then B down, and then a C wave back up toward that 5,000 plus area. The targets in most cases are over the 5,000 area, about 5,100 on the ES or so, and we're well short of that now. So if they do pull back from here and break support, we were looking for an ABC off the low if they were going to continue to the upside. That would make a lot of sense to give us a deeper B wave, get a lot of bears on board, and then give them one more last hurrah up to the 5,000 plus area to complete the move. So again, the theme for the Fed is support. First support, 49.3375. Second support, 4,900. Third support, 48.80. And then must hold 48.50 to continue in this more direct upward pattern. Over on the NASDAQ, Okay, so yesterday I gave a warning on the NASDAQ. I told you that the NASDAQ was lagging the ES. It was struggling to keep up on the pushes, and that it was starting to show signs of at least a local top. Again, a local top means this top will hold for now. They'll pull back, whether it be a couple hundred points or more than that, and then they'll come back and take out this top, or a bigger top. It could be a long-term top, but at least a local top. And we talked about the bounces here being weak in comparison to the ES, and then a possible top being forming, and it looks like today we're getting more evidence of that. The NASDAQ is already in a pretty major support area in this 17,417 area. And so with that, tomorrow it's going to be opening at a major support zone, and more major than the ES. The ES is on a support zone for a little bit more of a bullish direct move, whereas the NASDAQ is on a support zone to hold the top here. So this 17,417 area, and really 17,401 is the 1.0 of this move. So if you go A, B, C down, you would look for 17,401 to hold, which would be a spike of this low right here, which makes sense. They spike it down a few points below it, hold it, reverse it, and then take it back up for the next move. Then this would just be a bigger wave 4 like this, and your C would just move over like this. So NASDAQ is on the verge of a breakdown if they can't hold this level. And we do have the Fed catalyst, and we do have negative divergence, as I warned about. So with the NASDAQ, they need to hold 17,401 below that, and they start to cascade down, and then it's going to start to look like a bigger pullback on the NASDAQ. If, however, they can hold this level, we would look for them to push higher, back up to our target at 17,972 for wave 3. Then we'd look for another pullback and move up to 18,150 or so, maybe even a little higher than that given the extensions, 18,250 in that range to complete the overall move. So NASDAQ is in a little bit of trouble. Doesn't mean it's dead. It doesn't mean that the bears are in control, but the bulls really need to hold 17,401, a break below that. And again, just so we all know, the 17,417 level, see this spike down? That's not a break of that level. That is a poke and reversal. So a break is, for instance, if we said we had to break this 17,627 level, that is a break of the level. This big red bar, that's a breakdown, and then you see follow through. When you see a poke, you often see reversals. So just understand that a break of a level doesn't mean it goes a penny or a tick below it. It means it blows through it. And it doesn't have to blow through it right away. It doesn't have to get down here and go like this. It can do this, and then get through, but it needs to get through that level with a little bit of momentum. So that's what it is on the NASDAQ. The support level 17,401 is extremely important. Right now we're looking for this C down to complete and then a move up. But if they cannot hold support, it does open the door to start a bigger leg down. And where that leg reaches will be determined by its structure and exactly what we're looking at overall. So again, guys, remember, for the Fed tomorrow, the theme is support. You have several layers of support on the ES. NASDAQ needs to hold 17,401. Below that, you got some pretty thin structure down here to about 17,000. So NASDAQ, if it breaks support, will lead and likely pull ES with it. So I'd be keeping my eyes on NASDAQ to understand exactly what's going on. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans. They both come with a 7-day free trial. No obligation, no nothing. Come in there, make sure it's for you, make sure you love it, meet the trading team, make sure it's everything you want it to be before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking it out. We also have our Elliott Wave Advanced course, which is just about done. We're getting ready to release it, but we have released all the videos that are available to the team. Anyone who's a member of these monthly rooms gets that for free, and they have access to it right now. And you can check that out if you'd give us our 7-day free trial. We also have the Elliott Wave 4 Beginners online course. This is helping real traders make real money and understand the market in a way that finally makes sense. It can be very confusing when good news makes the market go down and bad news makes the market go up. And Elliott knew a long time ago that the news cycles meant nothing and that key levels mattered. Tomorrow with the Fed, we will have our key levels, and we'll know what happens when they break. We'll know what happens when they hold. This gives you a great trading advantage over the rest of the market. It is 25 videos where I go over 3 parts: the introduction, where we go through your mindset, the KISS method and why it works, the chart setup and tools, where we go through every tool you need to use with Elliott Wave and how to use it, as well as the Elliott Wave for Beginners area, where I go through each of the waves, how they work, how to measure them, how to find their targets, what happens when they fail, what happens when they succeed, the pivot, the theory of alternation, everything you need to know so that you can understand the market in a way that makes sense. The cool thing, guys, is if you don't want to pay the $67, I completely understand. That's why you get it for free if you become a member of the monthly rooms. In the first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing in day trade, so we do trade quite often in my room. And if you're looking for futures trading, individual stocks, income trading, and PT's advanced training, you need to check out PT's throne room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, the income trading method that's killing the market, and PT's reduced risk binary method that is absolutely awesome. He gets you in at a cheap price and gets you huge multiples on your money, and it's how he structures those trades that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Key takeaways for today: it's all about support tomorrow. 49.3375 is our first level. 4,900 is our second. 48.80, 48.50. Below 48.50, we have the makings of a much bigger pullback on our hands. Above that, and we can still make the direct move higher to 5,000 plus. Over on the NASDAQ, support is the key. They need to hold that 17,401 level. If they start below that, we could see a cascading effect to the downside, as you do have thin structure here. 17,000 would be the next support after that. However, if they can hold this support area, we would look for a bounce back up toward that 17.8 to 18,000 area. Guys, that is your market update for today. I will talk to you tomorrow.